He who does not know but want to make money has a glitch between his ambition and his skills level. So they become very unhappy, like happiness. Those who are unhappy, they have a lot of ambition. They want to make a lot of money, but their skill level is too low. So if that's your problem, you can be happier by lowering your ambitions or increasing your skill level.
Regarding funds, isn't there more objection in raising capital for a fund versus a syndication on a real estate property, since there is collateral and equity to protect their investment, and a fund there is not?
Okay, it's almost the same thing. You're either raising money for one specific deal. Here is the deal. I'm raising money for this building. That's the building I'm raising money for. So your money is secured by this building. Something happens to this building, I'm sorry, but that's your money. You understand the risk. It's disclosed right here. Or we're raising money for all these assets that exist in the fund. So if something happens to this property, we still have all these other properties. So you don't have to worry about specifically losing money here, this deal taking longer, this deal selling for a lot of money or anything. This is how we do it. So it's presented, if presented the right way, a fund is by far a lower risk, easier to manage the risk because of the diversification. It's like telling me, should I just buy Amazon? Should I just buy Facebook stock, or should I buy a mutual fund? Mutual fund is going to be a lot better. Heck, Amazon went from $200 some to $90. Not Amazon, I'm sorry, Facebook, and just laid off 11,000 people. Look it up. I mean, let me show you. S&P 500, which is a diversified thing, went down. I'll tell you the exact amount. As of end of last year, I'll give you the exact amount right here. I was just looking it up. Yeah, here it is. As a matter of fact, I'll put it on the screen. S&P 500 dropped, 2022, S&P 500 dropped almost 20%. The Dow Jones dropped almost 9%. My fund still paid the 6, the 8 as promised. So if you've done 28% better being in a fund than in this. Well, could you have done better in the syndication? Yes, there are some syndications that did very well and cashed out earlier, but we're still up and running. And people like the idea of being in a fund where there is some liquidity to get in and out. They like the idea that there is more than one asset, more than, like they can go after assets. So, it all has to do with how you present something. I am a firm believer, when you present something, present it completely truthfully. I have seen people that talk about the power of persuasion, and they say, when you're going to do public speaking, you have to stand where the light is like this and the light is like that. And when you talk about money, put your hand in your pocket every time you talk about money. And then at the end, when you ask them for money, put your hand in your pocket, and it's going to register because of the persuasion techniques of NLP, neurological linguistic. And I say, you know what? I don't need to do all this. I need to tell the truth, all the truth, and nothing but the truth. I need to present it enthusiastically, but realistically. I don't need to be too pessimistic. I need to explain the risk. And you know what? That's how I present it. They want to come in, welcome. They don't want to come in, no problem, no sweat. Those who want to go on a webinar and get hyped for something that could have risk that you're not disclosing, they're not your people. They're dreaming. I have people telling me, I can buy tax liens and I can get 12%. Why would I invest with you at 8? Because mine is cash flow. A tax lien that you buy, you may actually have issues, because I used to buy from the government and from bank foreclosures all these properties in 2009, and the one I did not like, I let them go in the tax liens. Why? Because they had tax issues, code enforcement issues, and all this, and that was the way to wash them out of the system and have somebody else go buy them in the tax lien, and when they win them, they got stuck with all these code enforcement and all this crap. And people are actually selling this as a great way to make money. You can look it up. We have a website. I think it's still up and running, actually. REO.
I think we just let that go, actually. But
well, anyway. So, we just sold them for nothing. Some of them, and the rest we let it go in the tax lien foreclosures. Because he who does not know but want to make money has a glitch between his ambition and his skills level. So they become very unhappy, like happiness. Those who are unhappy, they have a lot of ambition. They want to make a lot of money, but their skill level is too low. So if that's your problem, You can be happier by lowering your ambitions or increasing your skill level. So knowledge, after knowledge that gives you good judgment, what you must have is action that gives you experience so you can turn your talents into skills. Skills that are marketable, useful, and profitable. Marketable, useful, and profitable. And then you start networking. Because if you have knowledge, you take action and you network, you can make it way farther and further. Farther is a distance and further is kind of a psychological thing. It's a hypothetical thing. Further in life and in business. So be very, very careful how you present things. And the way you present them again is, this is a fund. It's not just a syndication or it's one asset. We have several assets and we're building more and we're getting this and we're getting that. If you're in discount mortgages, we have many discount mortgages, not just one big note. And it sells itself. And you then become full disclosure, and your legal piece, which is the private placement memorandum, becomes your marketing piece. And they're not just sold on you, but they're sold on what you represent. So hopefully that answers the question.